Inventory of unsold homes on the market in each of the last 2 years headed higher during September and October. That's because in late 22 and 23, mortgage rates spiked in the fall. But it's much more normal for inventory to peak in August and then bounce around a plateau before declining later in October. So it's the end of the summer. There are generally fewer and fewer people who want to sell a home late in the year. So even though there is a case to be made that in the post-pandemic world, the rise of remote work and homeschooling and things like that, we lost much seasonality that used to dominate the real estate cycles. There is still some seasonality to be had, and it's much easier to uproot your whole life when the days are longer and the sun is out. There are fewer sellers in the fall, and those who are listed and don't get offers are more likely to withdraw the listing and try again next year. In fact, right now, for every 2 sales, there is another listing withdrawn from the market. So we're in September 2024. We just had a second week in a row with slightly declining inventory of unsold homes. Both weeks were impacted by the Labor Day holiday, so it's not like we're witnessing a massive change in home buyer demand, of course. Like, in fact, I'll share in a minute about what's happening with the withdrawal listings. But last year, for example, inventory grew right through the holiday weeks. And at that time, with rates climbing, fewer offers got made, so the unsold inventory built up. This is a different market now. And as a result, inventory growth over last year is compressing. There are 38% more homes on the market now than a year ago, but that was over 40% growth just a couple of weeks ago. So that has implications for home prices, for sales, for buyer opportunities for the rest of the year and into the first quarter. So I'll share all this week's data in a sec. This week, Thursday, September 12th, is our monthly webinar when we'll dive into all these details. Some mortgage rates are sharply lower ahead of next week's Fed meeting. So what does that mean for affordability, for home sales, for pricing, for inventory? What about the local markets? So inventory in Texas ticked down this week. Inventory in Florida picked up. So the market is absolutely shifting. And so join us this Thursday, September 12th at 10 a.m. Pacific. There's a link in the description below to register to reserve your spot. These are limited to 1,000 attendees every month, and we get far more than that who want to join. So you can still save your spot. You just click the registration link in the description below to book your spot at the webinar Thursday. Okay, so let's look at the data. At Altos Research, of course, we track every home for sale in the country every week, all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand the changes in the U.S. housing market immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and it's Monday, September 9th. So let's look at all the details of the U.S. housing market. So we've had 2 weeks now with just little declines in unsold inventory count. Inventory is not climbing. It's basically flat. My gut says that inventory will rebound this coming week a bit. In fact, the inventory forecast model we use, which basically based on recent years' market behavior, expects an increase of just under 1% of unsold homes by next week. That would be totally normal for the mid-September week, and it would be totally normal to have a little inventory increase. And I think that's what we'll see. So, however, in this falling interest rate environment, we could see a third week of inventory decline. So that'll be fun to watch. I expect inventory to rise, but we could see that dip because of the falling rates this week. By the way, I will be traveling next week, so I won't do this video. So to confirm whether I'm right or wrong on that call, you can visit the HousingWire market tracker that Logan Motoshami publishes each weekend. You can find that at HousingWire.com. But there are just under 704,000 single-family homes unsold across the market in the U.S. That's basically unchanged now for 2 weeks, down like 0.1% from last week. There are 38% more homes on the market now than a year ago. Inventory has been climbing versus 2023 all year long. But that climb is now reversing. And I mentioned I expect inventory to increase by probably 1% this coming week. That would be totally normal. But last year, the market was deteriorating and climbed 2%. More homes built up, during that same week of September a year ago. Last year, inventory climbed between 1.5% and 2% through October each week and kept climbing all the way to the end of November. So we're in a different market now. And unless the Fed surprises us next week and mortgage rates jump again, if that were to happen, we could absolutely repeat last year's slowdown, but it's not happening at this moment. So in the long-term inventory chart here, I have highlighted each of the last 2 years. You can see how much inventory still had to grow in the second half of those years. Rising mortgage rates really deterred buyers at that time. But if you look back at 2019 here, you can see the old normal plateau across the summer into autumn. There are really 2 reasons that inventory is probably around its peak for the year now. So we can see that new listings rate continues to be restricted. There are just not that many people who are anxious to sell their homes in this environment. The other reason is the withdrawals. So for every 2 homes coming on the market, if we're going into contract each week now, there's a 3rd listing withdrawn for lack of an offer. So sellers may try the market, not find any takers, and decide not to sell at all. Since most homeowners have very cheap financing, it's very easy not to sell. But the longer this slowdown goes, the more would-be sellers build up. And so this is why we should anticipate inventory to keep gradually growing over the next few years back to the old normal levels. If mortgage rates fall substantially, however, inventory should dry right back up. And I'll spend more time on withdrawals in the webinar on Thursday. So there are 62,000 new single-family listings unsold this week. Another 12,000 new listings that are already into contract. So 74,000 total new listings is a bit more than a year ago, but significantly fewer sellers each week than in the pre-pandemic era. So in the chart here, each line is a year. The dark line is this year, and you can see it bumping along the bottom there. The slightly more sellers than last year, but still fewer than any of the gray lines from previous years. There's just nothing in the data that indicates this would abruptly change. You can see a gradual change coming. And the rest of the year, you can see the seasonal decline in sellers through the 4th quarter to reset in January. So I mentioned that for each of the 2 new contracts pending, there's a 3rd home withdrawn from the market. So 62,000 new contracts started for single-family homes this week, and another 30,000 or so withdraws. But both of these phenomenon work at the margins to keep a lid on inventory. So we're still on pace to do about 4 million existing home sales in 2024. In this chart, each line is a year, tracking the contracts that get started in a given week. So these are the newly pending sales. The most notable feature of the new pendings data is how abrupt the slowdown was in July and September of 22. So the rate spike in September of 22 was a big surprise, and buyers backed up very quickly, and you can see how quickly the sales rate dropped at that time. So even with rates falling now, I've mentioned that it's actually very difficult to see any uptick in sales. The dark line for this year is still bouncing along right where it's been for the last 2 years now. What I'm waiting for is the next 3 to 4 weeks of pending sales volume, watching this over the next month. If we get a slower seasonal decline than the previous lines here, we could see the year finally showing an uptick relative levels of sales by the time we end 2024. See that sharp drop in the light red line, September 22. Does the 2024 line stay above that as a result? So I don't know. I've been looking for sales expansion all year and it really hasn't shown. So, but the next window is at the end of September. So I'm going to keep watching it here. By the way, if you follow the MBA's Purchase Mortgage Applications Index, it had its low point last year in September also at the same time that our pendings data dropped. And it'll be really interesting to see if both our measure and theirs shows an annual increase by next month. Again, this wouldn't be really showing demand increase. It would just be capturing relative gains, less worse. Maybe the signal of finally an inflection point. So keep a watch out for that. You can read Logan's commentary on mortgage applications in the HousingWire Market Tracker each week on HousingWire.com too. Even as the supply of homes on the market is no longer growing, the prices that people are paying for homes is easing down. So prices are not falling, but the annual increase seems to be receding just a bit. So home prices peak each year in June and then decline in the second half of the year. So the slope of the curve in the back half of the year matters more for measuring the annual price gains. The median price of the newly pending home sales this week is $380,000. That's down a notch from last week and is barely above the same week a year ago. So essentially unchanged from last year. This is the price point that people are paying for homes. These are the contracts started each week. Most of the year, home prices have been averaging about 3 to 5% gains over 2023. You can see that elevated dark line here over the red line. But this week with a dip in sales price, it came in just a fraction above last year, essentially a 0% increase. So there's some bounce in the data this week. It could bounce back up over 3% next week again. But the key here is that we can see downward pressure, not upward pressure on home prices. This makes sense, of course. Even as the mortgage rates are lower, the back half of the year and a lot of would-be buyers are waiting until next year. Most of the home sales price measures are reporting still 3, maybe 5% home price gains. That headline home sales data is lagging though. So what we're watching here in the next few weeks is, do we stay closer to 0% home price gains, or are we staying in that 3 to 5% range? Price reductions seem to have peaked, in part due to this increasing levels of withdrawals from the market. In the fourth quarter of each year, homes that stayed on the market too long didn't see offers. They reduce their asking price, or they withdraw the listing, or both. They reduce price, still no offers, then withdraw for the winter. So maybe relist next spring if the market's better. So this is a normal pattern every year. When a home has been on the market with price cuts, when that home is withdrawn, the percentage here declines. So every year around the holidays, you see a steep decline in the percentage of homes with price reductions. You can read this withdrawals from phenomenon from two angles. So one is that it's a bearish market when there are not buyers and the sellers are discouraged. On the other hand, there are home owners who have very cheap financing. Most of them don't have to sell. If you have a mortgage payment that's $1,400 a month, but waiting 6 months might get you 20 grand more for your sales price, I can just choose not to sell now. I can afford to wait until conditions improve. Regardless of your orientation on the topic, fewer sellers means less selection for active buyers. It means a certain floor on home prices. Sellers will walk before lowering their prices further. Price reductions are at this local maximum, and that tells us that there isn't continued downward pressure. There isn't negative pressure on home prices. I think that's what we're seeing here. So I expect some fourth quarter climb in price reductions before the holidays, but nothing like the last 2 years, right? In those times of spiking mortgage rates, surprised the sellers, slowed the markets, and caused price cuts to accelerate. We have the opposite conditions now. So the big trends from the year are absolutely shifting now, and that's why we do this data work each week. So if buyers finally start moving, will we see it in the data? Maybe. Maybe mortgage rates have finally turned the corner. So for buyers and sellers, these conditions can change fast, and it can be very impactful for smart decision making. They need to hear the data directly from you so they know how to act. So you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We can help you know how to talk about the housing market with your clients and prospects today. There's a link in the description below. Click that and let's get started.